28th of January. It's Friday. I'm Joe Neighbour from Signal Centre and I'm talking ball today. Last one by myself for a while. Steve will be back on Monday, thankfully, so we'll be able to go in a little bit more detail with some of the charts, but hopefully while he's been off, it's been sufficient for you all to get a bit of an understanding about what we're seeing from a technical perspective and how we've been approaching markets. So let's get stuck into the latest headlines. So big news overnight was on the corporate front, particularly from Apple. Their shares rallied in late trading after quarterly revenue sailed past the Wall Street estimates, marking a victory against the supply chain crunch fueled by the pandemic and chip shortages. The surprisingly strong results suggest that fears of supply upheaval were overblown. The CEO Tim Cook has warned late last year that shortages could affect the company, but the tech giant has navigated the crisis and benefited from a flood of new products, including the iPhone 13, Apple Watch Series 7, and updates to Macs. Going over now to the geopolitical front, we've got the US President Joe Biden and the Ukraine President talking about new ways to bolster Ukraine's economy during the call on Thursday. The American leader will also host German Chancellor next month to discuss the situation with Ukraine amid questions over Germany's resolve to stand firm against Russia. In terms of what's going on elsewhere, obviously we've got more talk with regards to the fallout from the Federal Reserve meeting on Wednesday. Traders continuing to boost bets on higher borrowing costs, with money markets now expecting almost 5 interest rate increases from the Federal Reserve this year and 4 from the Bank of England. Investors are also speculating whether the Federal Chair, Jerome Powell, will front load hikes by potentially marking a rare 50 basis point move in March after he struck a hawkish tone at this week's meeting. The wages have rippled down through the markets and has driven a little bit of volatility and a dash to safer haven assets. So on that note, let's get stuck into some charts. I'm going to start off with the dollar index, as I often do, because this is so important in dictating what happens in plenty of other markets. So really important day yesterday. As you can see here, we've got this really strong green candle, really impulsive move to the upside, quite easily clearing this resistance that we've got at 96.94, which was the previous highs that we posted on the 24th of November last year. Sailed through those levels, still within this bullish trend channel, and looks as though we're getting close now to that 61.8% Fibonacci level at 97.72. Let's just scroll back a little bit to remind ourselves as to why that's relevant. So from the pandemic highs on dollar index that we saw at around about 103 down to the lows that we saw in early 2021, we are now very close to the 61.8% retracement of that entire move. So we've also got some resistance here. So it could be a key level for the dollar index in the near term. It also looks as though it's going to roughly line up with the upper end of this bullish channel. So I wouldn't be surprised if we do see some cooling off or some stalling or maybe consolidation in and around this kind of level before we maybe see a renewed push to the upside. My predictions for 2022 is that we would see the dollar index back above 100 at some point, and it certainly looks as though it's heading that way for now. So on the flip side of this, let's take a look at euro US dollar. And as you'd expect, we've seen a pretty nasty move to the downside, an impulsive move through these lows that we posted on the 24th of November at 111.86. We sailed through that with relative ease, to be honest, and we look as though we're heading towards our measured move target of this head and shoulders top pattern that completed back here in August last year, and also getting close to this blue line, which is a 78.6% Fibonacci retracement of this entire move here, from these lows that we posted around the pandemic kicking off to the highs that we posted at the early part of 2021. So really important level down here, I think at 110.05, between 110.58. So we could see some buying step back in, or maybe some short covering, and people exiting those short positions that have been so fruitful on the downside for euro US dollar. Let's take a look at cable next. That continues its sell-off, having retreated from this 50% Fibonacci retracement at 137.05. It's been a really sharp move to the downside, and we're giving this up pretty much as quickly as we made it on the upside. Again, another big impulsive move to the downside, highlighted more so by dollar strength. But we may be looking for some internal Fibonacci levels to maybe target here. Just have a quick look. So we're just around the 61.8% at the moment. The next level down is a 78.6 at 132.84. But given the way this is moving and the fact that we're in a downtrend, I wouldn't be surprised if we actually go back down to these support zones down here between 131.60 to 131.85 and maybe get a bit of another going over of that level at some point in the not too distant future. Okay, Euro sterling resumed its selling yesterday. We saw more weakness and it looks as though we're still heading towards this all important 82.75 level. Again, let's just refresh our memory as to why that's relevant. We have to go all the way back to December 2019 to see these previous lows, and we saw it again in February 2020. It looks as though that's going to get another testing at some point. So still very much expecting lower prices there. Aussie US dollar didn't have a great day yesterday as well. Again, on the basis of stronger US dollar, really impulsive move lower, taking out some key supports along the way. That support there, well, I say key support, more probably a mild support of the low there at 17.90. Next key level is this swing low that we posted on the 2nd of December, which we are getting very close to now. So it'll be interesting to see what sort of reaction we get here, whether or not there is any speculative buying that takes place in line with this level, or whether or not we are just going to continue in line with the dominant downtrend, sail through that level, and maybe, just maybe, even complete a really large head and shoulders top here. So looking at this, is this the left shoulder down to there? Then we've got this head up to here, which is the same as the sort of internal head and shoulders that we've talked about. Is this then a right shoulder, or was this the right shoulder? And that was a retest, and now we're seeing lower prices. Either way, it doesn't look good for Aussie US dollar, and it looks as though lower prices are set to be seen. So a lot of fresh air for that to move into on the downside. I'd be looking for that 61.8% level over the more medium term at 64.61. We will have a 50% level somewhere in the middle there at 67.56, so that may do a job as well. But overall, it looks pretty ugly, to be honest, on the Aussie dollar front. Let's just take a look at some measured move targets quickly, going from the height of the head down to what I'm proposing is the neckline, and we're coming in down here at 62.04. So yeah, it doesn't look good for Aussie versus the US dollar. Similar situation I'm imagining for New Zealand dollar. Sailed through support there at 67.01. That happened a good few days ago, actually, so that was leading the way on the downside. Approaching a 61.8% fib at 65.19. Maybe we'll get some support come in at that level. That's from that entire move there, as you can see. In fact, that is incorrect because that's moved. So let's go to the low and let's go to the high. I'm not sure why that's changed so much. So in fact, we're approaching a 50% fib level at 64.67. Apologies for that. The 61 is down at 62.31, so quite a lot lower actually. But yeah, as you can see, it's broken out of a bearish channel. There isn't really much support on offer here at the moment for this, but we do have a 50% fib level approaching, so maybe we'll see some stalling there in foreign exchange markets at the minute. So that's leading the way on the upside, obviously having quite an impact on not everything linked to it. So let's just move on to cryptocurrencies now. Bitcoin. We've seen some choppy price action in recent sessions. We are trading in a downtrend, as is highlighted by this blue resistance line. We've broken through this horizontal what was support and now appears to be acting as resistance. Yesterday we saw a bit of green, but pretty choppy really. We're sort of hugging around this 50% fib level, so it remains to be seen what will happen. I mean, it just looks as though it's maybe rounding off again for another move to the downside. As I've talked about on videos this week, I'm looking for potentially a move down to this 30,000 level on Bitcoin. I don't see anything changing while this downtrend remains in place. If we can break above that, then of course I'm very willing to change my mind, but for now the bias appears to be bearish and lower prices are expected. Similar situation with Ethereum, that rallied into this resistance at 26.51 and failed. We posted some red yesterday and we're on the back foot again today, only by 1% or so, so it's not a lot, but clearly the bias remains bearish for now, and ultimately this could lead to a retest of these 2021 lows that we saw around about 1726. Let's take a look at oil now. That pushed higher yesterday on geopolitical tensions. Still trading up around 9-year highs, although we posted a bit of a doji, but we were closing pretty much at new highs, or certainly the highest we've seen it in a very long time. On the back foot a little today, but nothing to be overly concerned about. I don't think. It still looks as though we are set for higher prices in the short to medium term. Silver was disappointing yesterday. I talked about this as my gun to the head trade. I was hoping this blue line would act as a bit of support, given that it broken through it quite nicely, come back and sort of did a job of holding initially as support, but yesterday it failed quite spectacularly. A really impulsive move to the downside, and you now wouldn't bet against another retest of this key level of support between 21.66 to 21.90. So given up on that one as a long idea for now. Looking at gold, similar situation. It looked as though it was going to break out through this resistance at 1830, seemed to be holding above it. We saw a nice retest and a move higher, which the technical analysts out there would have really liked, but we engulfed all of that pretty much on the 26th and then fell even further yesterday, also taking out this short-term uptrend line that we'd formed. So back into the doldrums for gold. Doesn't look like there's anything happening there in the short to medium term. I think the really long-term bias still remains bullish overall, but in the sort of more medium term, expecting more choppy price action and limited opportunities. So we'll await for further clarity on that from the technical side of things. Okay, let's move on to indices now. FTSE 100 is on the back foot today. Again, really sort of mixed setup here. We saw 2 days of great strength. Yesterday, we saw a really big move to the upside, trying to get back close to these highs that we posted not so long ago, in fact, back on the 18th. But we are giving some of that up today, down by 1%. It's actually one of the worst performing markets at the moment, only being outdone by the DAX. So let's move on to that. That's trying to engulf the body of the candle that we posted yesterday, but as you can see, the range was pretty huge. So we posted lows down to 15.046 yesterday, and almost, in fact, is that a bullish outside candle? We engulfed all of the previous days price action, so that's quite interesting. But overall, still looks like it's trading in a bit of a range for me. If we can get a break below this 1480, then I think we're completing quite a large top on the DAX, a really large range top. And we can start looking for lower prices on that. But it looks as though the outlook is set to remain quite mixed. So be careful if you're trading that market at the moment. It looks like it's got a bit of needs to do a bit of making up its mind. So as it stands at the minute, it's kind of no man's land. So we're talking about this range. It's kind of in the middle of the range. So from a risk reward perspective, there's not really much either way to be gained from that right now. So maybe we need to wait to either trade opportunities at the lower end or the upper end of the range, or maybe look for a break in either direction. Onto the Nasdaq yesterday, that would have been battered by what we saw with Tesla. The shares were down almost 11% yesterday. So we closed in the red, posting really a bit of a doji candle, in all honesty, just ahead of this 14.066 support level, which is relevant because it's his previous highs back here from April 2021. We have seen some wild ranges in the Nasdaq following the steep declines that we've seen. So maybe we are trying to consolidate a little bit here, or maybe it's just simply a pause for breath before we do actually take out this support level more convincingly and start heading lower. But I talked about this on the S&P. It could be that we're in the process of forming quite a large top here, and we are therefore going to expect more choppy and sideways price action. So maybe this is a left shoulder, maybe this is a head, maybe what we're doing here is sort of setting the low of the neckline before a bounce into a right shoulder before completing a top. Highly speculative at this stage because it's all ifs, buts and maybes, but it's just a theory maybe that might be worth giving some airtime to. Okay, let's look at the S&P 500. So similar situation here, just going to crudely draw on what I was talking about yesterday, which is this maybe head and shoulders top, left shoulder head. Maybe we are into a neckline here of support 4270, which is still holding. Big range yesterday, but ultimately didn't make any ground in either direction on the S&P 500. So maybe we will sort of see a bounce into this kind of 45.80 level before the sellers re-emerge and we actually form a large top. Again, all theoretical at the moment, just sort of spitballing some ideas, I suppose. But tops do take a long time to build, and maybe this is a really large one that we're in the process of building at the moment. So bias still remains on the downside, I think, with this for now. Clearly, support of 42.70 seems to be doing a job, certainly on a closing basis. We have had a little bit of a look below it, but that prompted a really sharp reversal. So looks as though that is the key level for people to watch today. Finally, take a look at the Dow. That is, again, holding pretty firmly around these multiple support zones that we've got. 33,029 is the lower end, up to 33,737. While we're sort of holding above there, there is the potential for a bounce to the upside. But the way all of these indices are sort of posting rounding price action, I would be a little bit concerned. And maybe we are in a process of forming some large tops here on these indices. And, you know, it wouldn't be out of the question. We've had a phenomenal rally really from the lows of the pandemic, and they haven't really checked back or corrected at any point during that. So maybe we are going to see a bit of a reality check here in a few markets over the coming months, and it's going to be a volatile space for investors. So that'll round that up for the week. We'll have a fresh look next week, get Steve's perspective as well, not just mine, and we'll see what we're thinking next week on where markets could head over the short to medium term. Okay, gun to the head trade from yesterday. I took a look at silver, which didn't work out. My theory was it was going to hold this support level here at 23.43. It was a little bit below that when I was actually lining up the trade yesterday, so I was hoping it was just a little bit of an overreaction before the buys step back in. Sadly, they didn't, and I was stopped out in that trade, so that was a 1 hour loss yesterday. So what am I going to do today? Well, I haven't looked at anything, if I'm honest. I'm just going to have a quick flick through some hourly charts to see if there's anything that's catching my eye. So do bear with me. Nothing so far. What's this? Euro, sterling, Swiss. Okay. Yeah, that'll do. I like that. So just to give you an idea of what it is I'm liking. So this has clearly rallied higher in recent sessions. This is an hourly chart. I've got some fib lines drawing on here already. Let's have a look and see if there's a 61.8 nearby. There is. Look at that. So it's rallied into that 61.8. Seems to have failed so far. If I draw on a short-term trend line, I've got 3 touch points here. So I've got 1, 2, 3. We've seen a break in the last hour. Having failed at that 61.8% fib. Also, for those with eagle eyes, may have spotted a bit of bearish divergence. So this is when we've made higher highs on the price, but not on the indicator, which is the case here with the RSI. So a few bits lining up for us on that. So let's take a look at a short trade, shall we? Let's sell it now at 124.42. Stop loss above that 61.8, which gives us a 49 tick stop. Just remove that. And I'm going to target a move all the way back down to these lows at 122.80. So looking for 3.3 R on that today. That is a sell on sterling versus Swiss franc. So yeah, found that one pretty quickly. Hopefully it works out. We'll see come Monday. Okay, day ahead. What have we got today? We've got earnings today from Chevron and Caterpillar, so an industrial focus in terms of the US numbers that are due out today. And then at 1:30 UK time, we have the US PCE price index, the Fed's preferred measure of inflation. The index is expected to rise 0.4% month on month and 5.9% year on year. So that may be a well-watched figure, as it is, as I say, the Fed's preferred measure of inflation. That's it for today and for the week. Hopefully it's been insightful for you all. Hopefully you've had a good week on the trading front and on the personal front as well. Hope everybody has a great weekend, and I'll be back next week with Steve. So until then, trade safe everybody and have a fantastic weekend. Goodbye.